Hey everyone, I am so excited to be back with another dividend investing video. If you've been following me for a while, you know that I really like the healthcare space as a long-term dividend stock investor because the healthcare space is an essential sector. We all want to stay healthy. We all want to live our best life. It keeps us healthy. And the healthcare space also happens to offer some of the best dividend yields at the lowest PE ratios, so the stocks tend to trade at realistic levels. I've been receiving a lot of questions from you out there about Pfizer. Pfizer is a stock that I own. I love it because it pays a healthy 4.2% starting dividend yield. And congratulations are in order for Pfizer for their vaccine, but I also want to offer congratulations to Pfizer for the successful spin-off of a company called Viatris. I've been receiving a ton of questions from my patrons on my Patreon community and here on YouTube. And so I'm going to offer this bonus video this week. I have an extensive financial analysis that I want to share with you all. And even if you don't own Pfizer, you're not considering buying Pfizer, this is a video that you do not want to miss because I'm going through lines and lines of financial analysis that I believe is important to understand when analyzing just about any stock out there as a value investor, as a dividend investor. And so I'm going to share all about this Viatris spinoff, what it means, what I'm doing. So get ready, everyone. I have a really exciting video today. All right, everyone. So before I get started, I just want to ask you to kindly hit that like button. The more likes that I get, the more subscriptions, the more comments, the better my videos will rank out there, the more people will view my videos, and these great videos will just reach more and more dividend investors. So help me out by hitting that like button. It means the world to me. And so I want to start today with a little bit of overview on Pfizer, and then I'm going to get into this whole Viatris thing and what it means. So check it out on the screen right now. I'm sharing a lot of data on the screen right now, but actually I'm not going to go through all of it right now. I'm going to come back to this later, but I just wanted to give you a background on what's happening with Pfizer. So right now, Pfizer is trading at $36.19. The market cap is $201 billion. This is a very, very large pharmaceutical company. The earnings per share this year is estimated to be at $2.83, and the earnings per share next year in 2021 are expected to be at $2.84. Now, why are the earnings not increasing next year? Well, I believe it has a lot to do with this entire Viatris spin-off. This is a reverse Morris Trust transaction where Pfizer basically spun off their Upjohn unit to combine with MYLAN to create a brand new company. And so I'm going to talk about that in the video today. But long story short, Pfizer, which no longer contains the Upjohn unit, I don't think they are going to grow as quickly into the next year simply because the comp is difficult. In 2020, they had Upjohn. 2021, they don't have Upjohn, so they need to make up for that. So that's why you don't see the earnings increasing as much next year. The PE, which I highlight, which I love, is in the 12s. It does not get better than that. And this is why I was saying in the intro that from a dividend investing standpoint, I like to buy value, and I persistently see value in this space. I pointed it out to everyone with AbbVie back in the day. That's a stock that's done really well for me. And Pfizer, I see the value right now at this PE of 12, and it seems like these stocks tend to trade in a range where they're honestly almost always exhibiting some level of value. So let's keep going. And so what I also want to share is just some quick dividend overview The dividend per quarter is 38 cents, per year $1.52. That's where I get a starting yield of 4.2%. I highlight that because in this low interest rate environment, a 4.2% starting dividend yield is really solid. It is really sweet. The payout ratio is a healthy 53.7%, so there's room to increase the dividend. And that's just what they've been doing. Over the last 5 years, they have grown the dividend on average per year by 6.3%. That is just under my personal benchmark, which I like to achieve, of 7%. And so I am really, really excited to see all of these great metrics with Pfizer. Now, what you also see on the screen right now are some statistics that pertain to the income statement from the 2019 annual report, the balance sheet, and the cash flow statement. I will go through that in the video later today. But before that, I want to talk about this MYLAN Reverse Morris Trust that created this new company called Viatris. And so basically what's happening right now, what's happening with Pfizer and what happened with Pfizer this week. Check it out on the screen. Basically what happened is there's a segment of Pfizer called Upjohn. In a non-taxable manner, Pfizer went ahead and spun Upjohn off from its main company. Upjohn basically got combined with another publicly traded company called MYLAN. In doing this, it created a company that they are naming Viatris. And so Pfizer shareholders will basically now own not only Pfizer stock, but they now also own shares in the new entity called Viatris. And this was done via a reverse Morris trust. And so it was a non-taxable event to Pfizer shareholders, although my understanding is it is taxable if you came into Viatris through MYLAN. And so let's keep going. Check it out on the screen right now. There will be 45,000 employees at this company. There is opportunity to restructure the company. In fact, it looks like there's about $1 billion worth of restructuring in terms of cost savings that is possible. And Pfizer shareholders will own 50% of Viatris, MYLAN 43%. What is Viatris? What are they all about? Well, Upjohn basically was the unit at Pfizer that was managing the drugs, if you will, that were not on patent anymore. These are drugs that expired, the patents expired, and so Upjohn kind of managed those types of drugs. MYLAN, it just so happens to be a company that does the same. It was an independent company that, separate from Pfizer, that basically specialized in these generics, if you will. These are drugs that are not on patent. And so with that, I want to share on the screen right now. Check it out. This is from the FDA website. And what I want to point out is what you see all the way on the bottom of the screen. What you see on the bottom of the screen is that when one of these pharmaceutical companies develops a drug, if you will, if they go ahead and they decide to patent that drug, that patent will last only 20 years. 20 years, honestly, is not that much time. And so one of the challenges with this industry, and maybe one of the reasons these stocks often trade at persistently lower PEs, is it's kind of churn and burn. They always have to develop the latest and greatest new drugs, new technology, because the patents are always expiring on their existing portfolio. And when the patents expire, other companies can come in and create generics. And when other companies create these generics, the name brand drug, if you will, the sales volume will typically dip. And so it's this game of churn and burn. But anyways, Upjohn was the unit at Pfizer that dealt with these types of drugs, basically the ones not on patent anymore. And that's what MYLAN did too. And so what Pfizer was thinking is, hey, let's spin it off. Let's spin off Upjohn, combine it with MYLAN so Pfizer can focus on the core business, which is innovation, new drugs, research and development, where Viatris, the new company that has Upjohn and MYLAN, can be basically the big powerhouse out there in generics and also biosimilars. And so check it out on the screen. Basically, the Upjohn group president will be the CEO of Viatris. His name is Michael Goetler. And Viatris started trading this week. It started trading on Tuesday, and Pfizer shareholders basically received 0.12 shares of Viatris for each Pfizer share. And again, as I mentioned, as you see on the screen, this is a non-taxable spinoff to Pfizer shareholders. Way to go, Pfizer. That is awesome. MYLAN, though, it is taxable, but I don't imagine there are too many MYLAN shareholders here in the community, but shout out if you are a MYLAN shareholder. I hope you're not, because that thing has been persistently falling in value over time. I'll talk about that in a minute. In fact, let's do that really quickly. I'm going to start with Pfizer, so check that out on the screen right now. What you see on the screen right now is just a quick screenshot of the 5-year performance of Pfizer versus the S&P 500. And Pfizer actually has lagged the S&P quite a bit. Over the last 5 years, Pfizer is up about 20%, S&P up about 73%. You can see Pfizer is the bottom line, S&P is the top line. Anyways, that's Pfizer's performance, which isn't great, but it's not horrible. Hey, it's all right. It's certainly, I would like to keep up with the S&P or beat it, but also when I see something like this, it oftentimes presents it's interesting to me. It presents an interesting indicator, if you will, that, hey, Ian, this thing has underperformed the market. It's probably time to buy more, because you know, Ian, over very long periods of time, it's going to do really well against the market. So it presents a buying opportunity potentially. But check it out on the screen right now as well. What I want to talk about next is do the same for MYLAN. And this is why I was kind of saying I hope there's not too many MYLAN shareholders out there, because over the last 5 years, MYLAN is down 68.5%. And so when you see a chart like this on the screen that is so poor, that is so awful, you start thinking, Ian, I own Pfizer, and they're doing this reverse Morris trust. They're spinning it off. I'm now in this thing called Viatris, which is part MYLAN, part Upjohn, Upjohn was from Pfizer. Should I just sell it? Because it looks like MYLAN is just a train wreck. I'm going to get to that in a minute, but before I can answer that question, I want to talk about what these companies do. So check it out on the screen. What I want to talk about next is this concept of generics and biosimilars. So you guys now know that these drug patents only last 20 years. And one of the drugs actually that's falling off of patent here really soon in the United States is AbbVie's Humira. That's one I've talked about here quite a bit in the past, and it presents unique challenges for AbbVie, but I've addressed this before in other videos. I'll link to them in the description below if you'd like to learn more about that. But that is another very interesting company in the space that I own. But anyways, as you can see on the screen, what Viatris really specializes in are these generics and biosimilars. And so what's very interesting that I learned through some research on Business Insider is basically biosimilars and also generics could be a very big growing market. Biosimilars actually cost a lot of money in years to produce, about 8 years and $250 million to produce. Generics don't cost so much, only about 2 years of time and $5 million. Now, I am no expert on the difference between biosimilars and generics, but my understanding is that the difference is a biosimilar basically is a different way, if you will, of achieving the same result as the name brand drug. They kind of reverse engineer, if you will, a similar drug that is supposed to have a similar result on someone as the name brand, but they do it a different way, and that's why it costs so much money and so much time to produce. Whereas a generic, my understanding is it's literally very similar to the name brand one, but it's not the name brand one. And so, but again, both take a lot of time and money to produce, but the biosimilars take a lot longer. Now, I'm not going to claim to be a guru or a health expert or a medical expert. That is not my field. And so if you are a medical doctor, a pharmacist, a nurse, someone in the space that knows a lot, please put in the comments below and correct me if I'm wrong on my how I'm describing things here with biosimilars and generics. I know this is somewhere where my knowledge is a little fuzzy, but I kind of generally understand it. Here's where I'm going with all of this, though. We all know right now things are changing. Things are changing in our world, and one of the things that's happening is the huge cost of name brand drugs is really under fire right now. It is under fire in so many ways. It's in the politics, it's in the media. And for me, one of the things that I like about Viatris is they specialize in generics and biosimilars. Again, generic is the off-brand way of getting the name brand. And the biosimilar, it's not necessarily the same as the name brand, but it's kind of a reversed engineered drug that should have a somewhat similar effect as the name brand. Needless to say, both the biosimilars and the generics end up saving consumers money. And one of the things that's talked about in our nation, in the United States quite a bit, and globally as well, is the exorbitant cost of these drugs. They cost a lot. Why do they cost so much? I'll tell you, it probably comes back to that patent. Well, one, it costs so much to just to develop these things. We'll talk about some of the financial statements later, but you'll see the billions and billions of dollars that Pfizer spends per year on research and development. So companies are in this research and development for many years for billions of dollars just to get one of these things to pan out. And then the patent only lasts 20 years. Well, because of that, honestly, they price it probably really high to make it worthwhile. But putting that aside, we all know that is under fire right now. And so for me, being someone that doesn't like a lot of volatility in my overall portfolio, being someone that kind of wants just a sleepy portfolio that doesn't have wild swings, that pays my cash flow that I can use and I can take that money and use it to pay for bills, or something just as simple as, hey, my dividend check came in, I'm going to go out to dinner tonight and top it off with a Starbucks mocha. Give me a thumbs up if you're a big fan of the mochas at Starbucks as well, or any of those drinks for that matter. But I like a portfolio that does not have a lot of volatility, and I also love massive cash flow, and I like to at least keep up with the S&P, if not beat it. Those are some of the goals that go through my mind. And I start thinking, given my investor persona, given that some of my big holdings out there, like the AbbVies of the world, the Pfizers of the world, they're kind of under fire because a lot of their name brand drugs are so expensive. I am not going to be selling Viatris. I'm going to be holding it, despite MYLAN being a huge loser over the years, tremendous loser. I'm going to hold it. And one of the main reasons I'm going to hold it is I view it as a hedge. I view it as my hedge just against uncertainty out there with the laws, with the regulations. I was reading something just about Medicare code, Medicare laws, and how that might be changing to basically because of the high drug prices. This is my hedge for this industry against all this drama that could potentially come its way. So that's how I'm looking at it. Let's keep going. Check it out on the screen right now. And so what I want to go through next are just a few numbers. I want to go through a few numbers with you all. And the expected pro forma 2020, this was from the Pfizer MYLAN press release quite some time ago, back in 2019. Wow. But anyways, it's directional. The revenue is expected to be in that kind of 19 to 20 billion range. Adjusted EBITDA, 7.5 to 8 billion. Free cash flow, this is exciting to me. This is why I highlight it. $4 billion. That's some serious cash flow. The new company will be focused on returning capital to shareholders, and so there's going to be a dividend of approximately 25% of free cash flow, according to this press release, and so I'm really excited to see that as a dividend investor. Another reason I'm going to continue to hold this, although I want to share something with you here that's really important. Upjohn is going to issue $12 billion of debt prior to the separation. The proceeds of that debt are retained by Pfizer, but the new company is going to have to pay back that debt. And so it's so interesting that Pfizer, and this will all make sense to you in a minute because I'm going to go through Pfizer's balance sheet really quickly, and it ain't that great. It's okay. But one of the things is I'm looking at the balance sheet from 2019 annual report. Pfizer's using this opportunity to tighten up their balance sheet to make it a little better. They're doing it at the expense of the spun-off company, the Upjohn MYLAN company. So one of the negatives of this thing is it's a long-term loser. MYLAN's been a loser. And Upjohn, I'd say, is a winner because it comes from Pfizer. Pfizer's a winner. But they're saddling the thing with a lot of debt, and the spinoff doesn't see the value of that debt. Pfizer does. I'm happy because I still own Pfizer. I'm not selling that. I don't sell stocks, very rarely. And so that's a good thing, but it's something I have to keep in mind. I'm not going to sell this Viatris. I look at it as my hedge, but I have to go into it eyes wide open that they're saddling it with debt. So moving on. What you see on the screen right now are my closing thoughts. And this isn't the closing slide of the video. I'm going to go back and do some more financial analysis for everyone in a minute. But before that, I want to get the answer out to everyone on Viatris, what I'm doing. And so check it out. And MYLAN's been a loser. Pfizer's a winner. Macro, most drug companies are lagging the market. This is an interesting sector, as I've discussed. I like this sector. I might even want to grow my allocation to the sector because it's on sale. I'm a value investor. The better value I can get for my money deployed, the more cash flow I see, more money I receive. Good stuff. I think generics and biosimilars are a hedge. Just discussed that. I can see Pfizer coming in and turning things around. I can. I hate the debt situation, but it does benefit my Pfizer holding. I like the free cash flow. I like the dividend policy. I would say investing is like handling a bar of soap. There's this old analogy out there that there's a bar of soap. The more you handle that bar of soap, especially if you're in the shower, the soap's all wet, it gets smaller and smaller and smaller because the soap's being used. It's going away. It's washing away. Investing can be like that my portfolio, instead of owning Pfizer, I'm now going to have Pfizer and Viatris. If I kind of handle the soap, if you will, if I sell Viatris, I could do that. But I don't like handling the soap. If I handle the soap too much, over the long run, it may not benefit my portfolio as well as just leaving it alone. And in fact, with that, one of the things that you can see on the screen here at the bottom is I went that way with United Technologies. I decided, hey, when United Technologies merged with Raytheon, became Raytheon Technologies and spun off CARR and OTIS, I decided, hey, I'm not going to handle the soap. I'm going to keep Carrier. I'm going to keep Otis. I'm going to keep Raytheon Technologies. I'm going to manage it as one. Man, has that paid off for me. And it's paid off even better because I bought Raytheon recently at the lows and it's spiked up from those lows pretty quickly. But Otis and Carrier, they have been just huge outperformers. Now, I'm not saying that Viatris is comparable to the quality company of an Otis or Carrier. That I don't know. But it just does go to show me that this handling the bar of soap, sometimes I will sell spin-offs, but these days I'm kind of the mind frame that, yeah, now I have 47 stocks, not 46. It's a lot of stocks. I'm going to add net new money to Viatris. Probably not. But am I going to sell it? No, I'm just going to keep it. I don't want to handle the bar of soap. It's nice to have that hedge in there. I like that it's a dividend payer. So let's check it out on the screen. I would say just the last thing is I reserve the right to change my mind. This is how I'm thinking on the topic right now, but potentially I will change my mind. We shall see. So with that, I want to take this opportunity to go into Pfizer in a little more depth. I have been doing a lot of financial analysis in my videos recently. I know you all enjoy seeing this. Thumbs up, please, if you do enjoy the financial analysis here. And quite frankly, shout out to all of my patrons. It is because of the generous support of the patrons on Patreon. You can support me for as little as $3 a month and unlock. I have a whole library of impromptu, shorter videos over there on Patreon. But I let my patrons know, hey, I'm going to have some fewer videos on Patreon this week. But you guys, through your generous support, are helping me do an extra video on YouTube this week. And that's this video. So thank you to all the patrons out there. And do check that out if you would like even more of me, because I'm on Patreon doing videos and there are a lot of them over there and growing. And so anyways, check it out on the screen right now. And what I want to do now is go through the 2019 income statement. And so the revenue in 2019 at Pfizer was $51.7 billion. The gross profit was $41 billion. So the cost of goods sold is very little. It's easy to produce. It's hard to kind of invent one of these things and get it through the FDA, get through all the phase 1, 2, 3 trials, all that kind of stuff. But once you know it works, it's coming to market, to produce these drugs is very easy. So gross profit is huge. That's one reason I like the industry. Operating profit is also huge. The operating margins at this company are 36%. And the way I calculated operating profit is I did include research and development, because I would say that is a general operating line item that you have to have. The patent only lasts 20 years, so they have to keep up with R&D to keep the company growing, or even, quite frankly, to keep the company stable. They need to keep innovating. So moving on, the net margins are 31, although realistically it should be in the 20% range. The net margins in 2019 had some one-time gain from this consumer healthcare JV joint venture transaction. We'll talk about that in a minute. But before I do that, one of the reasons I don't just look at net margins, one of the reasons I look at the gross margins, operating and net, is because sometimes the net margins might bump around a little. And so looking at the full funnel gives me more insights. So moving on, check it out. At the right-hand side of the screen at the top, you can see the balance sheet. And on the balance sheet, their assets are carried at $167 billion. But within that $167 billion, 35 of that is identifiable intangible assets, less accumulated depreciation. So these are intangible assets. I imagine this probably would be trademarks, patents, perhaps, just intangible assets. I'm not so sure it's worth quite as much as they're carrying it. I don't know. Who am I to say one way or another? But it's something I pulled out. And goodwill is $58 billion. Goodwill is basically when they buy a company, they make an acquisition, that is the amount above and beyond book value that they pay. Basically, if I take the intangibles and the goodwill out of the assets, I get what I kind of call like real assets of $73 billion. Now, maybe that 73 is a little too low. Maybe the real assets are more like $100 billion or 120. I just don't know if it's the full 167 is what I'm saying. And so I just have to be realistic. The liabilities are $104 billion with $35.9 billion long-term debt. Equity is there. Shareholders' equity is a strong $63 billion. But again, I don't think it's as good as it looks, because a lot of those assets are goodwill and intangibles. However, it all makes sense to you right now, probably as they spin off Upjohn and the benefit of the debt that's being taken goes kicked back to Pfizer. They're using this to clean up their balance sheet. So good on you, Pfizer, I guess. But poor Viatris, we'll see how they deal with all this debt that they got. We'll see how that works out. I don't know. Anyways, moving on, check it out. Just quickly from the statement of cash flows, they're doing $12 billion net cash from operations, and their net cash decrease in 2019 was $125 million. So they're kind of balancing their books, if you will, and I will get into that in a minute. So there's two things I want to close out with. I'm going to go through their income statement quickly and then cash flows. And so check it out, income statement right now. And what you see on the screen is basically 2017, 18, 19, what's happening on their revenues and their earnings. Revenues have been slightly decreasing. If you go down to net income, it's kind of decreasing. Although there's a lot of just kind of funny business happening in here. And so I guess why am I showing this? The main reason I'm showing this is it's really difficult to just look at this. This is why cash flows are so important to look at as well, because there is a bunch going on here, especially this gain on the completion of consumer healthcare joint venture transaction. And so that kind of throws things off at $8 billion. And so one of the other reasons I'm showing this is there is a huge $8.6 billion per year invested in research and development. So it just goes to show, again, it's different investing in a company like I discussed in my last video, like Hershey's chocolate company, the Hershey company. They have a blockbuster product, one and done. Pfizer, they can come up with a blockbuster product, but they got to pour all these billions of dollars per year to create the next blockbuster product, because if they don't, the company will shrink. It will shrink in size. The company will fail. And so that's one of the risks, if you will, investing in this space. But anyways, check it out on the screen. I guess what I just wanted to show here also is the net income. It just jumps around. The earnings per share, it jumps around. And this is why, for me as an investor, analyzing something like this, which is really difficult to analyze, on the prior screen, I was looking not just at the net margins, net profit, but I was looking at gross profit, and I was also looking at operating profit as well, higher in the funnel, because it's easier to get a sense of things higher in the funnel. You go lower in the funnel, it's just there's a lot going on, including this JV transaction. And so top of the funnel revenues, you can see, hey, why is it trading at a PE of 12? I'm not going to fool myself. The company ain't growing. Company ain't growing the last few years. And so, hey, I got to go into stuff eyes wide open. Ian, are you investing in companies, at least this company, is it too sleepy? It's not. Is it going anywhere? Is it not going anywhere? Over the long term, I believe it's going places. And I think as a $200 billion enterprise, it's a little bit more difficult to grow at that size. That being said, our world is getting more populated. Our world is getting more sophisticated. Everyone wants to live a long time. Healthcare is important. They've had so many blockbusters at this company over the year. I have a lot of belief in them over the long run, but in the short run, hey, it's underperforming the S&P and it ain't going anywhere. So something for investors to keep in mind, and something to be honest about. So check it out. I want to go into a few more things. I want to check out the statement of cash flows. And so this one I had to break up into two screens because it's pretty big. The first screen just shows the operating cash flow. And what you see is the operating cash flow is going down the last few years. And again, there's a lot going on here. In some of these years, they had a lot of impact from the Tax Cuts Act in 17 and 18, and in 19, they have something really crazy going on with this consumer healthcare JV transaction. There's a lot going on there over these years. But again, it's worth noting that the net cash provided by operating activities is going down, and it will be important over time to see that this number starts going up, that this number starts improving over time, because it cannot keep going down. So check it out on the next screen. What I want to show now is the bottom of the statement of cash flows. And what you see here is they have the investing activities, the financing activities. One of the things that I really enjoy seeing on here is the dividends. They're paying out $8 billion a year in dividends. What I don't like seeing as much is these purchases of common stock. They're buying a lot of stock. $5 billion in 17, 12 billion 18, 8.8 billion in 19. But perhaps the thing I like the most out of this is all the way towards the bottom, the net decrease in cash and cash equivalents. It's basically they're balancing the budget. 17, it was down 1 billion, which isn't much for these guys. 18, it was basically just a little negative. 19, a little positive. So they are roughly balancing the books over time. They're being prudent with their cash flow. And so I like to see that. I don't want to see something like this dip very negative. But I guess with a payout ratio in the 50% range, with opportunity to grow the dividend, heck, even if they stop those repurchases and instead of doing that, they pay more dividend, there's opportunity for this company to pay increasing dividends over time. With Upjohn out of the picture, now in Viatris, will they be able to, with all that money that was created from taking out the Upjohn debt, Will they do even more R&D? Will they focus on the next blockbuster? What will happen? All it takes is one Humira. Humira is an AbbVie drug, but if Pfizer comes up with the next Humira, for example, game over. It's going to hockey stick. It's going to increase quite a bit. And so I have a lot of faith in this. And obviously they just came out with the vaccine that will potentially help us in a very big way for the pandemic, global pandemic now. So that is obviously something not factored into the numbers that I'm analyzing right now. It will be interesting to see how that factors into it all. And so there's a lot going here, and I have a lot of optimism. I'm holding both companies, but at the same time, as a value investor, I have to be realistic, and there are a few things on their scorecard today that I just have to point out. There's room for improvement. And so put in the comments below, what do you think about Pfizer? What do you think about Viatris? Are you selling your Viatris? Are you holding it? What are you doing? It'll be really interesting to hear what the community says, but I'm going all out like I did for United Tech, holding my OTIS carrier and Raytheon Tech. I'm doing the same here. I'm holding strong my Pfizer, my Viatris. We'll see what happens with it over the long term. It'll be very interesting, but I'm totally taking the bar of soap approach and enjoying my abundant cash flow that I can use to pay the bills. Hey everyone, thanks for watching the video today. Really appreciate all of you. Hey, next week is Thanksgiving. I just wanted to say a happy Thanksgiving, a warm, happy Thanksgiving to everyone in the community all around the globe, and a happy holidays because we're heading in here to the holiday season. I love you all. I hope all of you out there are staying healthy, happy, staying positive, having good times with family, having success in your life. And I wish everyone also just around the corner a very happy new year. I think 2021 is going to be a new year. This was a bit of a weird year. Next year, it's a new year. And so I'm excited for the whole community here of dividend investors. Before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long Pfizer, ticker symbol PFE. I am long Viatris, ticker symbol VTRS, I think. I am long AbbVie, ticker symbol ABBV. I am long Starbucks. Man, I love that company. Ticker symbol SBUX. I am long Raytheon Technologies, ticker symbol RTX. Carrier, ticker symbol CARR. And OTIS, ticker symbol OTIS. Before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Just sharing my journey here for fun and entertainment on YouTube. Investing in the stock market carries a lot of risk. By the way, everyone, thank you to all of your generous support. I am going to be upgrading my lighting a bit. I know that the ring light and the reflection in my glasses, etc., has been troublesome. And so I am going to be making some upgrades to my setup so that the videos keep getting better. I love you all, and I will see you in the next video.